Hello, everybody, and welcome. So today we're going to be going over beneficial ownership forms as filed by, or when these are filed with the Securities and Exchange Commission. So my disclaimer and copyright notice: the information and opinions in this presentation are those of the author only and not the author's employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. The presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2025 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. Note that this presentation will refer to companies and other parties or the third parties. The author does not claim any copyright that belongs to those third parties. Okay, so when you are a publicly traded company, we kind of have been learning that everything is exposed. And that means like um, all of the various different, I would call it, say, let's call it provisions, or like everything is, all the matters of the company are exposed. Now, in addition to this, if you are a director or officer of a publicly traded company, or what we call an insider, then you also have to disclose publicly what your ownership is. And the companies I've worked for previously, you have to go through and to do this. So when we go through and look at this, and one of the things I will share with you is that if you are an officer or director of a publicly traded company, I you are running into something which I would call like, if you're trading your own stock, watch out, because you can get, and I want to say it's de facto insider trading, but if you're an insider, meaning an officer or director, right? Pretty much any officer at any level, because you're going to be privileged to that insider information. You want to enter into something a little bit later. We're going to call it's a Rule 10B. It's called a 10B5 plan, where you're essentially putting those shares with a broker and they're kind of blindly selling them at various different increments. So if you look up Rule 10B5, you'll kind of see this. But let's take a look at these forms really quickly. So insider transactions for forms 3, 4, and 5. For education, what's a form 3? When a person becomes an insider, what's a form 4? When an insider executes a transaction, meaning they might be receiving securities, but if they're selling them, that they also have to kind of go through, that is essentially only required when at least one transaction because of an exemption or failure to report. And so, again, that's really what you're looking at. And what you also have to be aware of is that if you have insider selling that's not been reported, you can be looking at shareholder lawsuits. And you want to be the only person who lives in a lawsuit or who wins in a lawsuit is going to be the attorney. So just remember that as you're kind of going through and looking at these. Now, here's something a little bit more interesting in terms of about Schedule 13D. This is when you're going through and you're actively basically going through and purchasing stock. And the real threshold is 5%. If you own 5% or more, you become a reporting person. And this is like right over here. Key takeaways, again, Investopedia. Thank you. When a person or group purchases or acquires 5% or more of a company's voting shares, you've got to report it to the SEC. And among the questions asked is, what is the purpose of the transaction, such as a takeover or a merger? So what they're trying to do is, like, if you're starting to go through and accumulate stock, what exactly is going to go through and happen with that? So that's when Schedule D generally needs to go through and to be filed. And I'm going to put this up here. So then you have Schedule 13G as someone who owns more than 5% of a common stock. And right over here, I'll leave these links up. I think I found this on somewhere like on Westlaw. And let's just go over beneficial ownership. This is where basically it qualifies passive investors. They can go through and use 13G or 13D, meaning that they are not planning on, well, for lack of a better word of it, causing a ruckus. So let's take a look really quickly. And this is Twitter. And I just want to show you, let's just pull up a random form 4. So as you see over here, the name of the person, I'm not going to pronounce his name because it's an amazing name. I just can't pronounce it. But this gentleman right over here, basically what he beneficially owns. And again, this is for insiders. He's a former CEO, and he's basically going through and reporting his basically any kind of changes in beneficial ownership. Look at another one right over here. Another person, former chief legal officer. So if you are an insider, you're going through and having to do this. And I'm assuming more than likely this is all occurring because Twitter was, in fact, they went through and were acquired. So by Elon Musk. So now when we go through and look at this, before I say goodbye, when we go through and look at this, so right over here, this is Schedule 13D, and I tried to find the original one that Mr. Musk filed, which was on April 4th, and Elon Musk, source of funds, sole voting power, sole dispositive power, and what percentage of the company is this? So this was basically 9% of the company. So he went out and bought these shares. So Elon Musk basically filed a 13G on April 4th. This 13D relates to the common stock of Twitter and amends the 13G. So you're no longer passive, you're active. And then over here, the Schedule D is being filed by Elon Musk. Principal address is right over here. Principal occupation of the persons is Techno King. That's nice. Business address right over here. Not been convicted in a criminal proceeding during the last 5 years. Not been a party. The purpose of the transaction. So this is on 413D. The reporting person and the issuer entered a letter of agreement which provides that the issuer appoint the reporting person to the issuer's board of directors to serve as a class 2 director, basically right over here. And reporting person holds the common stock for investment purposes, and then interest over here. So when you're going through and looking at this, so this kind of also shows when he was going through and buying the shares of the company. So again, it's yeah. So this is something where everything here was basically being purchased on the open market. And this is referring to the price per share in terms of what he was going through and buying. So that's basically when you'd have to go through and report a 13D. So if a company is filing a 13G, you can kind of assume that they're more going to be more passive. But if they're going to be taking over the company or they have a different purpose, you'd be going through and filing that 13G. But there you go. Those are some ownership forms. I want to thank you for watching here today. Please remember to like and subscribe. If you have any comments, please feel to leave them below. And I look forward to seeing you on the next video. Have a great day.